Greetings, everybody. Welcome to Liberty Call. Today is Thursday, November 16, 2023, just a week away from Turkey Day. Woohoo! Hope everybody's having a fantastical day out there. Looks like the markets, the S&P and the NASDAQ finished in the green. They were red most of the day. And so I guess that's some positive news. And we got some jobs news and article about the Fed driving this inflation bubble that we got. So anyways, if it is your first time watching Liberty Call, I'm glad you're here. Thank you very much. If you could do me a favor, if you could give me some thumbs up, like, share, subscribes, and a follow, press the notification bell. All right, let's go ahead and get into today's numbers. All right, Dow Jones finished in the red, down 0.13%, 45 points. It was down more than 100 points most of the day, closed at 34,945. SP 500 up 0.14, closed at 4508. NASDAQ up 0.07, closed at 14,113. The VIX up 1.06% today. It's currently at 1433. Canada flat, down 0.02. Brazil up 1.25, and Mexico down 0.63. In Europe, Germany was up 0.24. The UK down 1.01. France down 0.57. The Netherlands down 1.17. Spain up 0.28, Italy down 0.71, Switzerland down 0.61, and Portugal down 0.81. Russian exchanges both red today. MOEX down 0.81, the RTSI down 0.44, and the overnights, the Nikkei in Japan was down 0.35, Australia down 0.67, New Zealand down 1.41. In China, the Shanghai was down 0.71, the Shenzhen component down 1.23. China A50 down 0.79, DJ Shanghai down 0.81, Hang Seng down 1.41, and the Taiwan weighted was up 1/4. All right. So it looks like most of the world was red, unfortunately. Not shocking. But here domestically, we did pull out kind of a flat day. So we shall see where this goes. All right, let's get to the market recap for today. U.S. stocks slip on Walmart slump. Economic jitters. All right, U.S. stocks experienced a decline, with Walmart leading the slump following concerns about the economy and a series of weaker than expected economic data. Walmart, the largest U.S. retailer, provided annual guidance forecasting adjusted EPS, earnings per share, of $6.40 to $6.48 per share, falling short of estimates of $6.50. Despite beating Q3 expectations, Walmart's shares fell over 7%. The company's chief financial officer, John David Rainey, highlighted that inflation-impacted consumers are delaying significant purchases, aligning with Target's recent comments about ongoing consumer pressures from higher interest rates and reduced savings. In contrast, Macy's shares rose by 4% after the department store chain raised its full-year guidance following better-than-expected Q3 results. Cisco Systems experienced a significant drop of more than 11% as the company reduced its full-year revenue and profit forecasts, signaling a slowdown in demand for networking equipment. While some on Wall Street expressed concerns, others believe Cisco may benefit from long-term demand tailwinds in security and artificial intelligence. Palo Alto Networks, a cybersecurity company, saw its stock fall by 6%, despite posting solid first quarter results as its second quarter and full year billing guidance fell below estimates. Weaker economic data added to market concerns with higher than expected weekly jobless claims and a Philadelphia Fed index in contraction. The economic backdrop raised worries about a slowing economy, especially as the Federal Reserve is expected to maintain higher interest rates. Averting a government shutdown, the Senate passed a stopgap spending bill. Shocking. Well, Thanksgiving's next week. They didn't want to spend their holiday fighting about this in Washington. They got stuff to do, like, take time off and, chill out with their family and stuff like that. Let's see here. Stopgap spending bill awaiting President Joe Biden's signature before the weekend deadline. Well, he's over in San Francisco hanging out with the commies. Plug Power experienced a more than 7% decline as Citi downgraded its rating from neutral to buy. To neutral from buy, expressing concerns about the hydrogen company's execution and potential liquidity risks. Citi estimates Plug Power needs around $500 million in cash over the next 6 months and anticipates the company will tap capital markets for additional funding by third quarter of next year. All right, so that's what's going on in the world. Looks like retail and tech are not doing all that wonderful at the moment. Let's get into some labor data. U.S. labor market loosening as weekly jobless claims hit 3-month high. The number of Americans filing new claims for unemployment benefits increased to a 3-month high, reaching 231,000 for the week ending November 11th, the highest since August. The Labor Department's weekly jobless claims report suggested a gradual cooling in the labor market, supporting the Federal Reserve's efforts against inflation. Unemployment rolls expanded to levels not seen in 2 years, signifying a slowdown in the labor market as higher interest rates impact demand and economic activity. The rise in both initial and continuing claims likely does not indicate a significant shift in labor market conditions, with seasonal factors and difficulties in adjusting data for fluctuations during the COVID-19 pandemic playing a role. While job growth slowed in October and unemployment rate rose to an almost 2-year high of 3.9%, economic conditions remain relatively tight. Goldman Sachs suggested that the increase in the jobless rate since April has primarily resulted from an expansion in the size of the labor force rather than a decline in employment. Yeah, because just people popped out of nowhere. Financial markets anticipate an interest rate cut in May of 24 following a series of inflation-friendly data. The recent raft of such data includes subsiding inflation, a moderation in consumer spending, and a potential labor market cooling. Stocks on Wall Street traded lower after Walmart highlighted that Americans were cautious with spending due to higher prices and borrowing costs. The dollar fell against a basket of currencies, and U.S. Treasury prices rose as yields approached 2-month lows. Despite some challenges in adjusting data for seasonal fluctuations, the sustained increase in continuing claims is viewed by some as a sign that more unemployed people are experiencing longer spells of joblessness. The stream of encouraging inflation readings continued with a separate report showing a drop of 0.8 in import prices in October, the most in 7 months, amid a broad decline in cost of goods. Manufacturing output fell 0.7% in October, impacted by the UAW strike against automakers. And the Philadelphia Fed's report indicated further contraction in factory activity in the Mid-Atlantic region, with downbeat prospects for the next 6 months. So as of right now, labor is cooling. A few weeks ago, it was going back up. So it's just back and forth, back and forth. Plus, this is the holiday season where there are a lot of extra jobs picked up. All right, last up, an article from Zero Hedge titled Exposing Our Fed-Driven Bubble Economies, written by David Gordon via the Mises Institute. All right, in the Great Money Bubble, David Stockman challenges mainstream economic doctrines, particularly Keynesian economics and monetarism espoused by Milton Friedman and Ben Bernanke. Stockman questions the belief that government intervention is necessary to boost aggregate demand during economic downturns, asserting that the free market can self-adjust. He emphasizes that interconnectedness of the global economy and dismisses the notion of an isolated U.S. economy needing constant stimulus from Washington. Stockman rejects the idea of sticky wages, arguing that wages generally adjust to market conditions, except in specific cases involving quasi-monopoly unions like the government and the auto industry. The book challenges the narrative around the Great Depression, contending that the alleged banking system collapse was a necessary market correction, not caused by Federal Reserve actions. Stockman criticizes the abandonment of sound money by Franklin Roosevelt, suggesting it disrupted the natural healing process of the market. He considers inflationary expansion a significant economic evil and argues against the acceptance of 2% inflation target. Stockman warns of unsustainable asset inflation in prominent companies like Amazon, Microsoft, and Walmart, suggesting that investments in these companies should be liquidated. However, the reviewer acknowledges a lack of assessment of this particular aspect of the book, leaving it open-minded. Overall, Stockman presents a strong case against prevailing macroeconomic theories, offering a contrarian perspective on government intervention, inflation, and the historical understanding of economic events like the Great Depression. Yeah, there's unfortunately been a lot of falsehoods spread about how, the Great Depression was solved by, all these government programs, and then World War II, and FDR was this great hero. I'd argue that he was a communist and a Fabian socialist, and, probably should have had a bullet put in his head way before 1940. Anyways, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information's there. Hope you have a wonderful evening, and I shall talk to you next time. Adios.